Hello, I'm Donald Leggett and welcome to Share Views, brought to you by the financial website London South East. Today I'm joined by Jay Bhattacharjee, CEO of Aminex, a Tanzania-based gas production and exploration company which has just announced a farm-out of Ntorya, its largest asset. Aminex is premium listed on the London Stock Exchange. Welcome, Jay.
Good morning, good afternoon, thank you.
Yes,
thanks for
afternoon
having
it is.
me. Yeah.
Shareholders have been asking for an interview with you to explore the Zubair farm out.
Yeah.
And here we are.
Yeah.
So could you sum up the farm out deal with Zubair for us?
Sure, yeah. I think there's been quite an exciting week for us this last week, and definitely appreciate you giving me the opportunity to explain the deal to you. So the deal itself is...
Delighted to.
Yeah, thanks. So the deal itself is can be really broken down into some several components, and the first being that we get a cash payment of $5 million, which is due in 2 tranches. The main thing that, though, coming out of this deal is that we're carried through to production. The intent of the deal itself is to accelerate the development and production of the Rovuma and Ntorya asset. And then the second is obviously to reduce or eliminate completely any need for Aminex to have future CapEx requirements there. So breaking that down a little bit further, the main thing is that we are fully carried net to Aminex for $35 million. That implies a working program of about $105 million. And if we work that way through, the drilling of Chikambe, if you're looking at an average well cost of kind of $15 to $20 million gross, it means that out of our $35 million carry, we're looking at maybe about $5 million there. Post that, we are also going to be carried for the shooting of 3D seismic. And in that, the 3D seismic would be somewhere around $10 million. So it's about $2.5 million for our carry. And then we've got the early production system, which is designed to get us to a minimum of 40 million cubic feet a day. So again, that breaks down for us to about $7.5 million carried. So from that, if you add that together, it's $15 million. But you can see where future development, there's substantial runway for future wells, future operations. So then again, now what is the kind of the value of this bare minimum 40 million cubic feet a day? So in addition to the work program itself, if that 40 million, which is a bare minimum, and I want to stress that it's the minimum production, if that bare minimum production is there, that's net cash to us of $10 to $12 million per annum. So basically, we're getting there to the bare minimum for free, which is a great deal for us.
Okay. Now, an interesting thing happened.
Yeah.
The share price rose. The share price almost as dramatically fell again. So were people taking profits, or did they just think that the deal sucked and was actually really bad?
Well, it's an interesting dichotomy. I don't think I've ever experienced where we've had the institutional shareholders on a registry, excluding the Zubairs, who again are a related party and not allowed to vote on any of this stuff, but where we've had the institutions in our stock really love the deal, and some of the retail shareholders really disliked the deal. So the markets went up, they went down. We as a board think it's tremendous value. As you're aware, I'm a material shareholder myself. And I'm very excited about the deal. To me, it's a good old-fashioned farm out that doesn't really happen in our industry anymore. Very rarely do you see deals where you get carried through to production. So a company of our size in our cycle has no real further capital outlay in the Rovuma Basin, and that's exciting. So we're getting cash for free, and we're going to be accelerating the production to get there, which is where real value is created.
So why the change of strategy? Because, to be fair, it may not actually suit all shareholders.
Yeah, well, I don't think it's necessarily a change of strategy. What we're doing is delivering the value of the Rovuma Basin. Currently, the basin itself has a lot of potential. What we've now done is we've taken, we've farmed out a portion of the risk to allow that value to materialize and create cash for us. So it's definitely not a change of strategy. It's definitely an acceleration of getting the cash from the Rovuma Basin. And in doing so, you got to give some risk away, and that's what we've done. And we're, again, real excited. The numbers could be very prolific. We're not, as I stated earlier, we're not going to just produce 40 million. No, not us, not the government, not the Zubairs are going to be satisfied at that. And, if we do, the ullage or the ability for the plant or the space in the plant is somewhere between 100 and 130 million cubic feet a day. if we're able to produce up to that and there's still space there, this could materially mean $25 to $35 million a year for us. And that's roughly where we want to end up going towards.
Now, there is a feeling in the chat boards that the Zubairs, perhaps, if you forgive the phrase, had you over a barrel, because they were actually one of the major shareholders.
Yeah.
They had the inside line on the negotiations. You may have been working with other people, but they were always going to be the people to get the deal. Is that true?
No, nothing further from that. We've spoken with a lot of companies, a lot of financial institutions. We've explored as many avenues as we possibly can for where this basin is right now. We feel that, again, as a good example, we announced the deal, I think sometime at the end of April, that we were in advanced negotiations, and we just closed it in July. To give you an idea how wide of a net we cast trying to make sure that all of these opportunities were encompassed, we explored all the avenues possible. Again, it's a related party transaction, so we had no discussions at all with the Zubairs anywhere near us.
Did you try and raise capital and do the drilling of Ntorya yourself?
Yeah, we did. We explored the routes for equity. We explored the routes for debt. We explored the routes for offtake agreements. We explored the routes for service agreements. Currently, again, we don't want to be a company that goes drill finance. By doing this farm out, we're in a situation where we've got now a prudent operator who's a big company in a different business cycle than we are. So, we for the size of our company, have taken the project as far as we can possibly get. And to get carried to cash, as I said, these types of deals don't tend to exist.
So this is as far as the project was ever going to be taken by you? This is what you intended, and this is what's happened. You've got to the point in the cycle where you were going to do something, and this is what you've done.
Yeah, I mean, had the markets been different, I mean, oil and gas in Africa is still a difficult proposition. It's a basin that we very much like. It's a basin that we've now de-risked materially. But had the capital markets been different, or the situation's been different, we certainly would have tried to go at it. But we would have always been in this drill finance scenario. By doing this farm out again, we're coming back to unlocking cash. So we're spending basically nothing to get a full field development, a potential full field development, and material cash coming into the company.
And will the Zubairs make better operators than you would have?
No, they're just different operators. Again, we maintain really good relationships with the TPDC. We were working...
TBCD, yeah.
Sorry, TPDC being the government in Tanzania, I apologize. Again, we're working with them hand in hand. We are still operators on 2 of our licenses there. But we're just different operators. They have the ability to be a bigger company, which means that they get volume discount and volume pricing on drilling, on pipelines, equipment, construction, things like this. Whereas a company our size, where we're drilling one well and then pausing, we're drilling another well and then pausing while we're catching up with the capital markets, it's very difficult.
So you're de-risking, speeding the project up.
Exactly.
De-risking what's going on in Tanzania, and actually providing gas to presumably a big customer base.
Yeah, absolutely. The government is, very much wanting all of the operators to accelerate development, and certainly, we are now doing that. And for us as Aminex shareholders, myself, very selfishly speaking, on this as well, as a big shareholder, I'm looking forward to being able to generate cash from the basin. That's why we're in the business.
Now, it nicely takes to the point of how do you value Aminex now? How do you value Aminex in the future?
Sure. So Aminex in the future's got a tremendous future to it. Currently, with this farm out itself, as I said, the bare minimum, if it generates us between 10 and 12 million, based on the similar gas terms to what we're getting at Kilowani, if it's valuing it at that. But again, no one is here to produce at 40 million cubic feet a day. That's just the bare minimum. If we generate more, even if it's at 80 or 100 million cubic feet a day or 100, 130 million cubic feet a day, this could represent between 25 to 35 million of free cash flow net to Aminex going forward. And that's actually what the intent of this is. We're going to really drive this forward.
So let's confirm. It's not just 40 million cubic feet. You're looking for a lot more.
Yeah, the basin itself, we're not going to just get to 40 and stop drilling, right? It's going to be 40 more wells to get to 80 to 100 to 100 to 130. That's what the government wants. That's what industry wants. That's what gas demand needs.
What's funded in this deal, though?
All of it.
All of it?
Yeah.
But it can't be all of it. So $105 million, you
Yeah.
said. So how many wells does that get you?
So-
And then what beyond?
Okay, so it's if we look at it, so $105 million as far as the program itself goes, net to us in our carry. So we are guaranteed net to Aminex to get back $35 million. Just on the bare minimum work program itself, that's $15 million of our $35 million there. In the event we get to 40 or higher, if Chikumbi 1 is a very big well, and we get to a higher production rate, and we have a real boomer of a well, then ARA will compensate us through their profit gas to make sure we get 35 million there. But let's say that we have a very good well, and then we have to drill another 3 or 4 wells. That's why you shoot 3D seismic. They're not going to, so as a group, and we're going to be remaining independent as far as the joint operating agreement goes. As a group, you shoot 3D seismic to drill multiple wells. So if we have still that 20 million carry, we should be able to drill several more wells being carried. And again, that's the volume discount that you can get. You can bring in a rig and put down 2-3 wells, as opposed to us just currently going 1 well at a time.
So what's the timeline for the next year, and what's the news flow that's going to be driving the share price?
It's as fast as we possibly can do it. Again, the government's very much wanting the gas. We, as Aminex and Aminex as shareholders, very much want to get movement going. We've more or less completed the sourcing, the tendering of the rigs, and we're passing all of that on to Zubair and ARA, and we're going to be going forward. So in terms of just news itself, we should have the extensions of the licenses coming. We should have the drilling contracts signed up. We should have a spud date coming. We should have potentially a development license and gas sales terms done.
How long for the drill process to take, do you think, and then how long before we actually...
Well, if we keep with the pace here, we're still looking potentially at the end of this year to spud. Mm-hmm. So, we're going to do our absolute best to just keep the foot on the gas pedal on that.
Spudding by the end of the year, testing...
Yeah, spudding, testing, we'd be looking probably results of that well, probably first bits of next year.
Yeah.
So first quarter. First quarter.
And then how long before gas would flow? Quite some time.
Well, we'd be drilling the well and possibly shooting 3D seismic at the same time. Mm-hmm. Based on the well results themselves, if the well result is very good, we'd start construction probably next year of the pipeline. Once the line is connected, we'd be looking to produce gas.
Okay, excellent. Why did your chairman stand down? It doesn't look good when your chairman stands down.
No, it has nothing to do with that. Our chairman's chosen to retire. As I said, as part of the cycle goes, we're in a position now where the company is potentially fully funded through to a major amount of cash coming in, and Brian and I are very good with each other. He's a great guy. I can't say enough positive things about him. He's a first-class human being. But at this point in time, he's been with the company for 30 years, and sometimes it's okay to go up and
Brian feels that you're in a good, solid, safe position.
Exactly.
And it's time to
exactly.
pass the baton on.
Exactly,
Okay, you and Max Williams, the FT, put some money into shares.
Yeah.
Why did you do that? How much money did you put in, and are you doing it because it's a bargain?
Is it a bargain? We feel significantly that it is a bargain. It's we both bought roughly 500,000 shares into the company. I have periodically bought shares across.
And how much money did you put in?
On this go, about £10,000. But previous goes I put in more. Sometimes I put in less in there.
Would you feel in a position to advise other people to put money in?
Look, I can't give advice on when or not to buy shares, but we're in close periods so much that in opportunities where, again, personally and as CEO of the company, I feel that we're materially undervalued based on this. I felt it is.
Most CEOs feel that.
Yeah, most of them do. Most of them do. Yeah, most of them do.
Okay, let's move on to Kilwani. What's the latest on Kilwani? What is Kilwani, and is it a big part of the plan going forward?
Sure. Yeah, Kilwani is a field that's it's our producing field in Tanzania. The well went down late last year, and we've been working on remediation opportunities all the way through there. So we've sourced we've sourced a lot of the equipment. We've had quite a lot of forward progress on that. We're waiting for some further information from various suppliers and some documentation from the government as well, and we're looking to remediate that as quickly as possible.
And what happens next for Aminex? Are you still focusing on gas in Tanzania? What does the future hold?
Well, yeah, very much so. I mean, we're not walking away from Rovuma. In fact, it's exactly the opposite. You know, we're stressing that it's future cash flow, and you know, we're certainly as an independent from the Zubairs, we're going to be holding their feet to the fire there. You know, they're a private company, we're a public company, and we need to make sure that we get what we wanted out of the deal, which is a carry to cash. So definitely we'll have our eye on Rovuma. Definitely we're going to keep going after Kilowani and Nuni. We see some really exciting opportunities there. And then we'll be looking to other opportunities. Maybe we can find something that, you know, delivers low risk, robust shareholder growth.
Okay, thank you very much indeed. That's it for now. Thanks to Jay Bhattacharjee for joining us in the studio. And if you found this interview useful, please subscribe for more by Googling London Southeast YouTube. Thanks for watching.